At this point in time, you probably already know that the Bollinger Bands indicator is that tool that you use when you want to gauge market volatility, as well as to identify overbought and oversold levels in the market. But what you probably didn't know is that there is an improved version of the Bollinger Bands indicator that also incorporates the Standard Deviation Channels into its calculations. This combination provides a more comprehensive view of the market's price boundaries and deviations. In this video, we're going to explore what this Bollinger Bands alternative indicator is, as well as a trading strategy that we can do using that tool. If you end up finding this video helpful, remember to leave a like. Let's get into it. So the indicator that we're talking about is called Bollinger Bands Percentile. To add it to your chart, go to TradingView and open any trading security that you like in any time frame. Next, open the indicator search tab and type in Bollinger Bands Percentile. Select this one by Algo Alert. The Bollinger Bands Percentile is a mean reversion indicator. It's designed to analyze price positions using the Bollinger Bands and the Standard Deviation Channels. This is the Bollinger Bands indicator, and this is the Standard Deviation Channels indicator. So basically, the Bollinger Bands Percentile works by combining these two indicators into a single indicator, making it way better than a standalone Bollinger Bands indicator. This indicator is made up of several different components. Let's go over them real quick. This line that changes color from green to red and oscillates between 0 to 100 is called the Bollinger Bands Percentile line. It's basically a 20-period simple moving average. This line oscillates between values typically ranging from -10 to 130. It signifies where the current price stands in relation to the Bollinger Bands indicator. When this line changes color from green to red, it provides a visual cue about the market sentiment. Specifically, the Bollinger Bands Percentile line calculates the position of the current price between the lower and the upper Bollinger Bands as a percentile value. The indicator is also composed of upper and lower bands. These bands encapsulate the traditional extremities of the Bollinger Bands. They are an indicator of market volatility. When the Bollinger Bands Percentile line goes into the upper band, that indicates an increase in bullish market momentum, and when it goes into the lower band, that indicates an increase in bearish market momentum. Then we have these red down arrows. These symbols are critical reversal markers. Whenever you see a red arrow pointing downwards like this, that indicates an impending bearish retracement or a potential downward movement in price. On the flip side, the green arrows pointing upwards like this signify potential bullish reversals. These indicate the possibility of an upward movement in price and can be seen as a bullish continuation or reversal signal. This horizontal line, typically set at the 50 percentile mark, is called the baseline. It acts as a pivotal reference point for the Bollinger Bands Percentile indicator. When the Bollinger Bands Percentile line rises above this 50 level, that indicates a bullish trend, signaling that the price is in the upper half between the Bollinger Bands. Conversely, when the Bollinger Bands Percentile line descends below the 50 mark, it indicates a bearish trend, suggesting that the price is situated in the lower half of the Bollinger Bands range. Looking at the settings of this indicator, we can customize the length of the moving average or the Bollinger Bands Percentile line. We can also change the source and the multiplier period. For the strategy we're going to showcase in this video, we're going to leave all the settings at the default values. Now, the way this indicator works is really simple. When this wave is colored green, that indicates a bullish market momentum, and when it goes above this red upper band, that indicates an overbought market condition. Conversely, when the wave is colored red, that indicates a bearish market momentum, and when it goes below this lower band, that indicates an oversold market condition. Now, what about these green and red arrows? Well, these arrows are only generated when both the Bollinger Bands and the Standard Deviation Channels indicate bullish or bearish conditions, leading to stronger reversal signals. Now, at this point in time, I know you may be thinking,
but how can we use this indicator to trade?
Well, I'm gonna show you. But before that, let's talk about our channel sponsor who helped make these videos possible, hankotrade. hankotrade is one of the most reliable forex brokers out there. I personally use them on a daily basis. As you can see here, this is my trading history. I mainly scalp gold, and up here you can see that this is actually a live account. The reason why I love hankotrade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest it can go. For those of you that love high leverage, hankotrade offers a maximum leverage of 1 to 500. If that's not enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $25,000, they're going to give you a bonus of $25,000. So now you'll have a total of $50,000 to trade with. To access the bonus as well as all the other perks, sign up to hankotrade using the link in the video description. Now back to the video. Now to take a long trade with this indicator, we're going to wait for this trend wave to break below the lower band. This indicates an oversold market condition. After that, we're going to wait for a green upward arrow to be printed. This indicates the probability of a trend reversal to the upside. For short trades, we're just going to do the opposite. We're going to wait for this trend wave to break above the upper band. After that, we're going to wait for a red downward arrow to be printed. This indicates the possibility of a trend reversal to the downside. While these trades were super profitable, this indicator produces lots of false signals when the market is ranging. To avoid such false signals, let's add two more indicators to the chart. On the Indicator Search tab, type in Twin Range Filter. Select this one by :MCK. Next, type in Trading ABC. This one by Lonesome the Blue. Double-click on the Trading ABC indicator to access the settings panel. On the Inputs tab, disable these three options. Then on the Style tab, disable these two shapes options, and then click OK. For the Twin Range Filter, we're going to leave all the settings at the default values. The Twin Range Filter is going to be used as our final entry confirmation indicator. When it says buy, we buy, and when it says sell, we sell. The Trading ABC indicator is going to be used for trend confirmation. When this trend cloud is colored green and the price is trading above it, that indicates a bullish trend, and so we're only going to be looking to take long trades. Conversely, when the trend cloud is colored red and the price is trading below it, that indicates a bearish trend, and so we're only going to be looking to take short trades. Now, with these three indicators added to the chart, you may start to wonder,
And how exactly are we going to take trades with all these indicators combined?
Well, let me show you. To take a long trade, first, the trend ribbon of the Trading ABC indicator should be colored green and the price should be trading above it. This indicates that the market is in a bullish trend. Second, the Bollinger Bands Percentile line, this red wave right here, should break below the lower band of the Bollinger Bands Percentile indicator. This indicates that the price is oversold and therefore a higher probability of it going back upwards. Immediately after the break below the lower band, we want a green upward arrow to be printed. This increases the probability of the market reversing to the upside after this retracement. After the green arrow is printed, we want to make sure that the very next signal that gets printed by the Twin Range Filter is a buy signal. What this basically means is that the very first signal that gets printed from here onwards by the Twin Range Filter should be a buy signal. If it happens to be a sell signal, the whole setup becomes invalid and we'll have no choice but to skip that setup. All our entry conditions are met on this candle, so we're going to enter a long trade here. The stop loss is going to be set below the most recent swing low. And for the take profit, we're going to set it at 2 times the risk. We let this trade run and take profit. For short trades, we're going to do the opposite. So first, the trend ribbon of the Trading ABC indicator should be colored red and the price should be trading below it. This indicates that the market is in a bearish trend. Second, the Bollinger Bands Percentile line, this green wave right here, should break above the upper band of the Bollinger Bands Percentile indicator. This indicates that the price is overbought and therefore a higher probability of it going back downwards. Immediately after the break above the upper band, we want a red down arrow to be printed. This increases the probability of the market reversing to the downside after this retracement. After the red arrow is printed, we want to make sure that the very next signal that gets printed by the trend range filter is a sell signal. What this basically means is that the very first signal that gets printed from here onwards by the trend range filter should be a sell signal. If it happens to be a buy signal, the whole setup becomes invalid and we'll have no choice but to skip that setup. All our entry conditions are met on this candle, so we're gonna enter a short trade here. The stop loss is gonna be set above the most recent swing high. And for the take profit, we're gonna set it at 2 times the risk. We let this trade run and take profit. As you can see, the Bollinger Bands Percentile indicator combines the core principles of the Bollinger Bands with additional layers of analysis to provide traders with a richer, more detailed view of market trends. If you're interested in this particular strategy, remember to do extensive backtesting and forward testing and combine it with price action to make it even better. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.